Let's go to the Johannesburg Stock Exchange now. Nompumelelo Siziba is standing by. Good afternoon to you, Nompumelelo. Big political developments today, and we're seeing the rand firming.
That's right, Nzinga. Thanks very much. The rand definitely firming in response to political statements made today. Look, it was firmer before the ANC caucus announcement at Parliament. So it was around 1185 before that and strengthened to around 1180 on the back of Paul Mashatile making it very clear and Jackson Tembu making it very clear that it's either Mr. Zuma resigns today or there'll be a motion of no confidence pushed against him tomorrow, which is likely to be successful since the ANC is in the majority, and of course the EFF are also pushing for that motion of no confidence. So they say if that goes through, then they hope that President Cyril Ramaphosa of the ANC will become the president of the country as early as tomorrow or Friday. We have to wait and see. But like I say, a firmer rand. On the equities front, we do see that the local all-share index is up in positive territory. That's pretty much in line with global markets. But we do see that the mining counters have been hit hard today. Let's take a look at the indicators. I'm joined by Michael Trehan. He's a portfolio manager at Vestact. Thanks for joining us, sir, as always.
Always good to be here, Nompu.
Good stuff. Let's start with the global picture. In the United States, data will be coming out of there on inflation. People jittery around the globe around that particular number. Just explain why and why the markets seem to be generally up today.
Yeah, as one market commentator said this morning, it's probably the most watched inflation figure in probably about 10 years. Generally, the market's been focusing on the job side of things. Now we're focusing on inflation because before that inflation was benign, it was going nowhere. The stock market over the last 2 weeks has been pulling back quite heavily because there's the fear that inflation is going to run harder than expected, which means interest rates need to be raised globally quicker than expected, which means people selling equities moving into interest rate related products like your bonds. So yeah, very much a big focus, a Hoppers 3 hour time on US inflation, because that'll be a good indicator of what the Fed is probably going to do going forward. And if inflation's higher than expected, you can probably expect the stock market to fall off again. And if it's lower than expected, then I think traders are going to be confused and say, oh, we don't know what to do now.
You're a long-term investor for your clients. So when you're faced with a situation like this where a number could just, knock things out of kilter, what's your strategy at this point in time for your clients and their money?
Turn off their portfolio statements so they can't see what's happening. No, but on a serious note, if you're a long-term investor, you don't want to be looking daily. You maybe weekly, maybe monthly. Research has shown the more that you look at your stocks, the more anxiety you get, which means the more active you are, which means increased costs, which means increased bad decisions. If you're a long-term investor, take a long-term view, don't look every day, know the reasons why you own the stock, and only if that reason changes, then you can sell the stock. So our general advice for most of our clients, and that the clients trust us, is just don't look at your things. It will be okay in the end.
Now, one of the important themes that have been coming out in the market discussions is what central banks, especially developed market central banks, are doing in terms of monetary policy. We see the United States has obviously started raising interest rates. The ECB has hinted that maybe by September they'll begin to withdraw stimulus in the form of QE, quantitative easing. And Japan has been very resistant to that because it's struggled with deflation for many a year. But we hear today that they registered yet another positive growth print. That's the 8th consecutive print of growth over 8 quarters. So do you think they're also now going to be forced to begin to remove that stimulus that they've been providing all these years, given that their economy is essentially growing?
Yeah, I think you'll need a few more quarters of good growth and then inflation to come through, because it's one thing to have growth, but growth without inflation means that the Reserve Bank or their central bank doesn't need to do anything. So as it stands at the moment, inflation in Japan is still below 1%, so not even close to their 2% target range. Until that inflation number starts creeping higher, the Reserve Bank probably won't do anything. I think for the viewers at home, Japan went through basically a decade where prices were dropping, so deflationary. And that's very bad for an economy, because if you're a consumer at home, and you know that washing machine you want to buy is going to be cheaper next month than this month, you're not going to spend the money. And without spending, your economy doesn't turn over, and it creates a whole bunch of bad things. So that's still going to be fresh in people's mind. And as a central bank, you'd rather overshoot the inflation mark than risk removing the stimulus and then going back to deflationary. So for now, you just do nothing.
All right, I hear you. Now the good news for South Africans is that we're getting some certainty. The ANC has come out and said that they would like Mr. Ramaphosa to be installed as president as early as tomorrow. How realistic that is, well, that's questionable, I suppose. But they've given Mr. Zuma a deadline to resign today. If not, the motion of no confidence goes ahead. The rand has firmed quite substantially. I don't know by how much percent. It's now hovering around 11.81 against the US dollar. Your thoughts very quickly.
Yeah, confidence leads to investment, investment leads to jobs, jobs leads to consumer spending, which then leads to GDP growth and more people being hired, and that cycle continues. So we need certainty, whichever way it goes, and as an investor we look on the sidelines and we let the politicians do what they do best.
All right, thank you very much for your time. That was Michael Chohan, he's Portfolio Manager at Vestact. Certainty is the key. We cross back to studio.
Thanks, Nompumelelo Siziba, coming to us live there from the JSE.